Good afternoon, everyone. It is Tuesday, the 23rd of February 2021. It is also time for some more technical analysis to help you guys time your currency purchases and sales. Now, I'm looking to add massive value today, as I always do. If you don't know who I am by now, my name is Patrick French. I am the founder and director of the Berkshire Exchange, and we help companies with currency exposure to save a ton of money when it comes to making international payments. So if that sounds like you, stick around. I'm sure you're going to enjoy this video. Just before I do get into today's content, if you can go ahead and follow me on Twitter at PatrickFrench85, also at PatrickFrench85 on Instagram. Send me a DM, let's connect. I'm also obviously on LinkedIn. Connect with me, send me a message. And let's get straight into today's video. So I'm going to be breaking down the G3 currency pairs. So I will just put myself down here in the corner so you can see the charts more clearly. So we're going to start off by having a look at the pound versus the euro. So as it stands at the moment, we're up just shy of the 116 level. We're trading at 115.91. So we can see from the beginning of the year, we've had a very strong rally up, and we're now just shy of the 116 level. This is a fantastic time to buy euros. We're at a 10-month high, so we haven't been to these levels for at least 10 months. In terms of your next target for importers, if you've got some upcoming payments, I would say around these levels here, which is around 116.50, would be your next price target to look at, where the market might run into some resistance. Above that would be 118, and then above that would be the top of our range around 120. So those are your price targets for importers. For exporters, it doesn't look good, unfortunately, because we are leaning towards more appreciation for the pound. We've got a very strong vaccine rollout program happening in the UK. Boris Johnson yesterday came out and laid out the framework of how we're going to unwind restrictions, and that's been taken as another positive for sterling. So if you do need to repatriate funds, euros, now might not be the worst time, considering it looks as though the pound could strengthen even more. So that's the pound versus the euro. Let's move swiftly on to pound versus the US dollar. So for the past 5 months, we've been in this ascending channel here, just making our way steadily up the channel. We hit our 140 price target on Friday, last week Friday, and since then we have been comfortably above 140, looking as though we're heading up to the top of this ascending channel, which would be roughly around 142. So in terms of price targets, 142 would be the next price target that we see. Because we have had such a strong rally up, there is a possibility that the market does come back down to test this 140 area before using it as a springboard to head higher. So we do often see that after we have a very strong rally, we do see some profit taking or some sideways consolidation whilst the market digests. So that's how things are looking. Similarly, for exporters, we are leaning towards a stronger pound. So if you do need to repatriate some dollars you've been sitting on, it might be worth biting the bullet. Obviously, it's not great prices to do that, considering we're at sort of multi almost 2-year highs. The last time that we were up at this level, going all the way back to around April 2018. So not the greatest price to repatriate your dollars, but considering we could be heading up to this level here, 148, that's our sort of medium to long term projection for where the market could head to, then it may be worthwhile considering your options now. So that's the pound versus the US dollar, and then we'll have a quick look at euro dollar. So the euro's been quite weak today. That's why we're seeing such a big appreciation on pound euro, and we're also seeing the dollar get the better of the euro in the euro dollar pair as well. So we've got this area here plotted at around 120.50, and we've also now plotted the underside of a channel which hasn't really developed yet, so we're just using this trend line to see if we can use that to figure out where support will be. If the market does fall back down, it may be in line with this 120.50 level, and also in line with hitting the bottom of this trend line. All in all, we do expect the euro to appreciate versus the dollar. So the first target really would be this 122 level, which is just above the previous highs over here. And the reason for that is because we expect the US dollar to be quite weak going forward. We know that the forward guidance on US interest rates is that they will be held low for a very long time. And there is a lot of liquidity in the markets at the moment, which means that people are not flocking to safe haven currencies such as the US dollar, and all of that bodes well for the euro to appreciate medium to long term, in our opinion. In terms of higher price targets than 122, we would probably be looking up around the 123 to 123.50-ish area as a secondary target. So I think we'll leave it there, guys. I don't want to go on for too much longer. It's already gone on a bit longer than I wanted to. I hope you found value in the content that I've just delivered. If you do have a company that has currency exposure and you'd like to save some money, and you'd like to have a chat with us and see if we can help you meet your objectives for the coming year, please do, as I said, send me a message, DM me on Instagram, and let's connect and see if we can help you. So that's it for today, guys. Have a fantastic rest of the week, and I will speak to you soon. Take care.